Good evening, ma'am.
Good evening, Harish. Good evening, Amrita. Take admission of a partner. Kirtika, good evening, dear.
Good evening, ma'am.
Yeah. We were doing IFR, right? Investment Fluctuation Reserve.
Ma'am, page number?
Just a moment. I am checking. Page number 24. 24.
Taken, ma'am.
Okay, fine. So you can take page number 25. Today we are going to learn about revaluation account. What is revaluation account? Whenever a new partner enters into partnership firm, we prepare revaluation account. All the assets and all the liability given in the balance sheet are revalued. Means whether the value of the assets are increased or decreased, liabilities are increased or decreased, all these things are revalued. Revaluation account is a nominal account, and we prepare when the new partner comes into partnership firm. Whatever revaluation profit or revaluation loss we get after preparing revaluation account, then we distribute the revaluation profit or loss among old partners in old ratio. Again, new partner doesn't have any role in revaluation account. He doesn't have any role. So whatever revaluation profit or loss, it will be distributed among old partners in old ratio. Now what is the format of revaluation account? As I said, it is a nominal account. So debit, credit, two sides, particular amount. Old balance sheet will be given in the question and some adjustment will be given. So each and every adjustment you have to read and understand. By reading the adjustment, you will come to know whether a particular asset, value of particular asset has increased or decreased. Accordingly, you have to show it in revaluation account. For example, suppose in adjustment, it is given that plant and machinery are increased by rupees 10,000. What is the meaning of this line? Whatever plant and machinery value is shown in the balance sheet, asset side, it is increased by 10,000 means suppose in old balance sheet the value of plant and machinery is 80,000. And in adjustment, they are saying that value of plant and machinery is increased by 10,000 means now value of plant and machinery has become 90,000. So there is increase of 10,000. Now you have to think, if value of any asset is increased, it is profit or loss for the
Ma'am,
firm?
your voice is breaking.
Okay, just a moment. Now can you hear me? Now my voice is clear, Amrita?
No, ma'am.
For everyone my voice is breaking. Harish, Kirtika, Roshni.
No, ma'am. No, ma'am, your voice is clear, ma'am.
Okay. Amrita, then check your net. Maybe there any issues.
Ma'am, I'll rejoin now.
Okay, dear. Okay, now it is clear. So what we have to do? First you have to think whether value of the asset is increased or not. As in our example, I said by 10,000 value of plant and machinery is increased. So it is profit or loss for the firm. If value of any asset is increased, obviously it is profit for the firm. So whenever any profit happens due to increase in assets or due to decrease in liability, we record it in the revaluation account credit side. As I said, revaluation account is a nominal account, means all the losses and expenses we record in the debit side of revaluation account, and all the income and gains we record in the credit side. Suppose value of any asset is increased, it is profit for the firm. So we will write in the credit side of revaluation account. Suppose liability, for example, creditors are shown 10,000 in the liability side of the balance sheet. And in adjustment, they say creditors of 2,000 written off. What is the meaning of written off? Written off means we don't have to pay this 2,000 to the creditors. That is the meaning of written off. Creditors are written off means we don't have to pay 2,000 to the creditors. Now, it is decrease in liability. Again, you have to think, if there is decrease in liability from firm's point of view, it is profit or loss for the business? Obviously, it is profit. Suppose I have to pay 10,000 to you people, and due to some reason, any reason it may be, now I have to pay only 8,000, means 2,000 is profit for me, na? In the same way, firm needs to pay to creditor 10,000. Due to any reason, firm now will pay only 8,000, means that 2,000 is profit for the firm. And whenever any profit arises due to revaluation of assets and liabilities, we show it in the revaluation account credit side. So again, this will come in the credit side by decrease in liability, by increase in assets, value of assets. So what will come in the debit side of revaluation account? Suppose value of the asset, suppose building. In the balance sheet, value of building is 1 lakh. And in adjustment, they are telling that building is decreased by 10,000. So now the value of the building has become 90,000. From 1 lakh to 90,000. So there is decrease in value of asset. It is loss for the business. Any decrease in value of the asset is loss for the business. So where you will show this loss? Debit side of revaluation account, you have to write to building, because building has reduced value of the building by how much? By 10,000. In this way you have to solve, prepare revaluation account. In the same way, suppose in the balance sheet it is given that creditors are 20,000 for example, and when you read the adjustment says that there is unrecorded creditor of 10,000. What is the meaning of unrecorded creditor? Unrecorded creditor means we have to pay 10,000 to the creditor, but that creditor does not appear in the books. Now only we came to know that there are some creditors to whom we have to pay 10,000. That is why it is in the adjustment. Now the liability has increased. In balance sheet, creditor were I think 20,000 in our example. In adjustment, they are saying unrecorded means we didn't record, but we have to pay the liability 10,000. So creditor has increased by 10,000. Liability has increased now. Before it was 20,000. Now it has become 30,000. 10,000 has increased. Again, it is a loss for the business. Any increase in liability or any decrease in value of the asset is always loss. We have to record in debit side of revaluation account. So, 2 assets in case of decrease, 2 liability in case of increase. After doing all these things, as usual, what we do in ledger accounts, we have to make sum total of debit and credit. Suppose credit side of revaluation account is more than debit side, means profit for the firm. So then what you will write in the debit side of revaluation account? To profit transferred to partner's capital account in the given ratio. Suppose debit side of revaluation account is more than credit side, means loss. That loss will also be distributed among partners in old ratio. Old partner, old ratio. No new partner. No entry for the new partner. Okay. Revaluation account concept is clear to you all? Yes? Tell me, Amrita, Harish, Kirtika, Roshni, revaluation Concept is clear to you?
Yes, ma'am. Yes, ma'am.
Okay, fine. Harish, how you did your accounts exam, dear? Yesterday you had your accounts or today? Yes, Harish, can you hear me?
Yes, ma'am.
How was your accounts exam? How you did your accounts?
Fine, ma'am.
It was easy?
Somewhat.
Okay, for how much marks you had?
40 marks, ma'am.
What were the chapters?
Ma'am, ratio, accounting ratio, comparative common size, and the first chapter. Then operating cost, ma'am. This fourth chapter. No, fifth, yes, ma'am. Till operating.
Okay, okay. Once you get the marks, let me know, okay? You can WhatsApp
Sure,
me. Okay, thank you, dear. So, page
Yes,
number,
ma'am.
okay, dear. Page number 26. 26. Partners capital account. We learned how to prepare revaluation account. Now we are going to learn how to prepare partners capital account. What are the steps to be followed for question? First, listen carefully. Whenever you prepare partners capital account, there are two sides. You know how to prepare partners capital account, right? Debit, credit, particulars amount, and in amount column, if there are two partners, you have to divide amount column into two parts in the same way, like that. Then what you will do in the question? Balance BD will be given. What is balance BD? In the balance sheet, liability side, balance capital balances of the old partners will be given. So by seeing that, in the credit side of partners capital account, you will write by balance BD and write the amount. Now, suppose there are certain items which you will find in liability side of the balance sheet. Balance sheet will be given in the question, adjustment will be given in the question, and they will ask you to prepare revaluation account, partners capital account. Now, suppose any reserve is given. Any reserve means whenever you start solving the question, you have to see the liability side of the balance sheet whether these items are there. For example, general reserve, contingency reserve. If these reserves are there, you have to distribute these reserves among the partners in old ratio. So these reserves you have to distribute means it will come in the credit side of partners capital account. For example, PL account. In liability side of balance sheet, if PL account is given means it is profit. If in asset side PL account is given means it is loss. So if in liability side you find PL balance, that is credit balance, profit, you will distribute among old partners. So by PL account, and whatever the amount is given, distribute in old ratio. Suppose in debit side of the balance sheet, that is asset side, if PL account balance is given, that is loss. So if you have to share loss among the partners, what you will do? You have to write in the debit side of partners capital account. Why? Because losses are paid by the partner to the business. If business suffer any loss, that will be paid by the partner to the business. So whenever partner pays anything to the business, their capital will decrease. That is why we will show it in the debit side of partners capital account to PL account. And if the business earns profit, it will be shown in the liability side, credit side, and that profit business will pay to the partner. So we will write in the credit side of partners capital account by PL account. So why we are debiting PL, why we are crediting PL account, you should be thorough with the concept. Not just like we are debiting or crediting PL account. It depends on the concept. Debit, like asset side of PL account shows loss, and loss partner will pay to the business. So we are debiting PL account in partners capital account, debit side. And liability side of PL account shows credit balance, means profit, and business will pay profit to the partner. So in the credit side of partners capital account, what we will do? We will write by PL account and distribute the profit among old partners in old ratio. That is the reason. Suppose in the asset side of the balance sheet you find any goodwill. Suppose there is any goodwill balance given in the asset side of the balance sheet. What you will do? You have to write off that goodwill. Now what is the meaning of write off? Write off means removing from book of accounts. Now that old goodwill already appearing or existing in the book of accounts should not be shown in the new balance sheet. That is the rule. You have to remove it. Question will not say. You have to check if there is any goodwill in the asset side of the balance sheet. Question is not going to tell you to remove, but it is rule you have to remove it. How you will remove it? You have to write it off. How? Goodwill is an asset, that is why it appears in the asset side of the balance sheet. If any asset you want to remove from books, means you have to credit the asset. So to goodwill account. Now which account you are going to debit? Partners capital account. Suppose there are two old partner A and B. So A's capital account debit, B's capital account debit. Suppose the goodwill amount is 10,000. So this 10,000 will be distributed among A and B in their profit sharing ratio. Suppose they are equal partners, 5,000, 5,000. So what will be the journal entry for removing goodwill from book of accounts? A's capital account debit, B's capital account debit to goodwill account. Now when you prepare partners capital account, in the debit side of partners capital account you have to write to goodwill and you have to deduct from partners capital. Any doubt so far? Any doubt you are having so far? Yes? Till here it is clear to you all?
Yes, ma'am.
Okay, fine. So adjustment, goodwill, revaluation, capital adjustment. We will learn everything, don't worry. Closure of revaluation and capital accounts, finalize balance sheet, everything we are going to learn. First we will see the question. Question number 1. BS means balance sheet. Balance sheet of Raman and Aman as on 31st March 2019. So Raman, Aman, there are two partners. Their balance sheet on 31st March 2019 are as follows. What I said, whenever you see the question, what you have to do? First you have to check the liability side of the balance sheet. If you check liability side of the balance sheet, there is provision for bad debts, outstanding expenses, then bills payable, sundry creditors, workmen compensation reserve. One reserve we got, workmen compensation reserve. Then capital of old partner Raman and Aman. So whenever you find this type of reserve like workmen compensation reserve, you should check the adjustment. Is there any liability regarding that? Then you will decide how much amount the old partners will get. If you see the adjustment number 3, page number 27, adjustment number 3, there is a liability. Liability towards workmen compensation was estimated towards at 60,000. So there is a liability for workmen compensation, workers. How much? 60,000. And how much we have created? Only 55,000 reserve we have created. So 5,000 is a loss. That loss where we will show? We have to show in the revaluation account debit side. We have created reserve for 55,000. Now the workers are asking 60,000. Liability has increased 5,000. This is a loss. We will show in the debit side of revaluation account. To workmen compensation reserve 5,000. Then what you will do? This 5,000 rupees, what you are going to do? This is a loss. Okay. If you see the asset side of the balance sheet, bank account 24,000, bills receivable 80,000, sundry debtors 95,000, stock 14,000, furniture 70,000, machinery 2 lakh, land and building 1,96,000. So no distributable item is given in the asset side. What are the distributable item? Suppose PL account or goodwill or advertisement suspense or deferred revenue expenditure. These are certain items. If you find it in the asset side, you have to remove it. Remove it means the same concept as I taught you for goodwill. Just credit these items and debit partner's capital account and distribute in the old ratio. On the above date, Suman was admitted. So Suman is a new partner for 1/5 share in the profit. For how much Suman is coming? 1/5 share. Suman is the new partner coming for 1/5 share. On the following conditions. What are the conditions? Suman will bring 2 lakh as her capital. Suman will bring how much capital? Her share of capital 2 lakh. And necessary amount for her share of goodwill premium. So, her share of goodwill she will bring. The goodwill of the firm on Suman's admission was valued at 1 lakh. Goodwill of the firm is given. Don't get confused. It is not Suman's share of goodwill. Goodwill of the firm is 1 lakh means, and Suman is bringing her share of goodwill. So you have to calculate how much she is bringing. If goodwill of the firm is 1 lakh, her share is 1/5. She is coming for 1/5 given in the question. 1/5 of 1 lakh. That is her share of goodwill. She is bringing in cash. Outstanding expenses will be paid off. So whatever outstanding expenses like 18,000 given in the liability side of the balance sheet will be paid off. So this 18,000 will be paid off. Okay. Now what is next? Rupees 5,000 will be written off as bad debts. So how much debtors are shown in the asset side of the balance sheet? Sundry debtors 95,000. Out of this 95,000, they are saying 5,000 is the bad debts. What is the meaning of bad debt? You must have learnt in class 11th. Bad debts means they are not going to pay. They are bad debtors. This 5,000 bad debts means business is not going to get 5,000 from debtors. Debtors of 5,000 has become bad. That is the meaning of bad debts. Business will not get 5,000 from debtors. It is a loss. Whenever you find any loss, you have to record in the debit side of the revaluation account. Now next. And a provision of 5% for bad debts on debtor was to be maintained. Now what they are asking you, 5% provision should be maintained for debtors. Okay, you have to create provision for bad and doubtful debts, 5% on debtors. Already there is provision for bad and doubtful debts 7,000 already in the liability side of the old balance sheet. If you see, already business has created 7,000 rupees. So why we are creating provision for bad and doubtful debts? So that in future, if any bad debts happens to the business, that loss can be compensated from this provision. Here bad debts 5,000 has already occurred. So out of this 7,000 provision already created earlier, we can compensate the loss. 5,000 loss, no need to show in the revaluation account. Why? Because provisions are always made to compensate the loss. This is a new concept. Whenever provision for bad and doubtful debts are created by the business, it means in future if any bad debts happens to the business, that loss will be compensated out of this provision. In this question already they have created 7,000. How we came to know? It is given in the balance sheet. Provision for bad debts 7,000. In adjustment they are saying 5,000 has become bad debts. So this 5,000 loss we can compensate out of this 7,000. So again there will be provision of 2,000. But the question doesn't end here. Again they are asking you to create 5% provision. So how you are going to create this 5% provision? How you will create 5% provision? Always remember, whenever debtors are given in the balance sheet and suppose any bad debts are given in the adjustment, always remember this concept, or please write it down in your rough note, whatever you are having now. Whenever debtors are given in the balance sheet and in adjustment they are telling you that bad debts of rupees 5,000 or like that, first, before creating provision, you have to deduct the bad debts from debtors. In this question, total debtors are 95,000. In adjustment, they told you that 5,000 has become bad. Bad debts are 5,000. So, 95,000 minus bad debts 5,000. Now, the sundry debtors are for how much? 90,000. Now they are asking you to create 5% provision. So on which amount you will create 5% provision? Only on 90,000, not on 95,000. Please write it down. Again I am repeating, whenever there are sundry debtors in the asset side of the balance sheet and you find bad debts in adjustment, first deduct the bad debts from debtors. In this question, 95,000 sundry debtors, bad debts in adjustment 5,000. So deduct 5,000 from sundry debtors, you will get sundry debtors 90,000. Then only you have to create provision. 5,000 of 90,000. If you create, it becomes 4,500. They are asking you to create provision 5%. So 5% of 90,000 comes 4,500. Now what you are going to do? Already the provision is created by the business. How much? 7,000. How we came to know? Because it is given in the liability side of the balance sheet. Provision for bad and doubtful debts. Already we find in the liability side 7,000. But as I told you, that 7,000 will be used in case of any bad debts. Bad debts is also given in the adjustment 5,000. So that 5,000 we will not show in the revaluation account, that loss, because provision is there. Provision will be used for that loss only. So you have to adjust bad debts 5,000, out of the provision 7,000. Now the old provision is 2,000. Now you have calculated the new provision, because in adjustment they are asking you to create a new provision 5%. So you have calculated 5% on 90,000. It comes to 4,500. So in the new balance sheet, you have to show 4,500 as provision for bad and doubtful debts. Already 2,000 provision is there, right? 2,000 provision is left out now. How? 7,000 provision is there, but bad debts has occurred 5,000. So after compensating 5,000 bad debts, 2,000 still provision is there, old provision. New provision they are asking you to create 4,500. So only how much? 2,500 will be the new provision. 4,500 you have to create. 2,000 is already there. So more how much? 2,500 more you have to create. And this 2,500 more provision is a loss. Always creating provision is a loss for the business. So that loss we will show in the debit side of the revaluation account. Any doubt here? In this provision for bad and doubtful debts, any doubt anyone is having? Very important concept. Any doubt? Kirtika, Harish, Amrita, Roshni? Anyone, any doubt? Okay.
No, ma'am.
Okay, fine. If it is clear, good. Okay, now adjustment number 4, page number 27, adjustment number 4. Machinery was to be depreciated by 18,000. You have to see in the balance sheet what is the value of the machinery given in the asset side. It is 2 lakh rupees. 2 lakh rupees is the value of the machinery given in the asset side of the balance sheet. In adjustment, they are saying machinery was to be depreciated by 18,000 means you have to charge depreciation on machinery 18,000. So the value of the machinery is decreased by 18,000. From 2 lakh you have to deduct 18,000, and when you prepare new balance sheet, after deducting 18,000 you have to show it, the remaining amount in the balance sheet. That comes to 1,82,000. This amount of depreciation is again a loss because the value of the machinery is decreasing by 18,000. Asset value is decreasing, so it's a loss. You have to show in the debit side of the revaluation account. What you will write? To machinery 18,000, because by 18,000 value of the machinery is decreasing. Now, and land and building was to be depreciated by 54,000. Now see what is the value of land and building. It is 1,96,000. Now again land and building value is also decreasing or depreciated. Both means the same. Value is decreasing only by 54,000. Again there is a loss because land and building is asset and value of the asset is decreasing by 54,000. So again you have to write in the debit side of the revaluation account to land and building 54,000. And when you prepare the new balance sheet, if the question asks you, then only you have to prepare new balance sheet. Otherwise no need to prepare. Then you have to reduce this 54,000 from how much? 1,96,000 and show the balance. Now we are going to prepare revaluation account. So in revaluation account, first what you will write? You have to write the to workmen compensation reserve 5,000. How? Workmen compensation reserve already created by the business 55,000 given in liability side. But in adjustment, worker are demanding 60,000. So 5,000 more liability needs to be created. That is loss. So to workmen compensation reserve 5,000 is a loss, which we will show in the debit side of the revaluation account. Now provision for bad and doubtful debts 2,500. How? 95,000 is the sundry debtors and 5,000 bad debts. They are asking you to create 5% provision, that is the new provision, because old provision already created 7,000 shown in the liability side of the balance sheet. Now what we are going to do for this? So first whatever the loss, that is bad debts is 5,000, that 5,000 bad debts you will adjust from the old provision already created, that is 7,000. From 7,000 you have to deduct 5,000. The old provision still remains 2,000. Now you have to create the new provision. How you will create? Always you have to create new provision after deducting the bad debts given in adjustment. So 95,000 is the sundry debtors, 5,000 bad debts given in adjustment, deduct it, 90,000 sundry debtors will come. And they are asking you to create 5% provision. 5% on 90,000. It comes to 4,500. Now the new provision to be created is 4,500. But already old provision we have 2,000. So how much more? The liability is increasing. Provision is a liability for the business. So 2,500 is more we have to create. That is loss for the business. So we have to write in the debit side of revaluation account to provision for doubtful debts 2,500. And machinery depreciated 18,000, again loss. We have to show in the debit side to machinery 18,000. Land and building also depreciated by 54,000, again loss. Whenever there is decrease in value of asset, it is loss for the business. We will show in the debit side of revaluation account. To land and building 54,000. Nothing in the credit side, no income in the credit side, all are losses only. So in the credit side you have to write by loss on revaluation. How much? 79,500. this loss will be distributed among old partners, old ratio, no new partner. So Raman, Aman, they are old partner. Their profit sharing ratio is not given in the question. It means equal partners. Whenever profit sharing ratio is not given in the question, you have to assume they are equal partners. So distribute the loss equally. 39,750, 39,750. Now we are going to prepare partners capital accounts. Debit, credit, particular amount, particular amount. Whenever you prepare partners capital account in admission of a partner, you have to include the new partner amount column also. New partner is also coming into the business. So his capital account will also be prepared. So whenever you prepare partners capital account, you have to open his account also, new partners account also. Here two are old partners, Raman, Aman. Suman is the new partner. That is why we have created three amount column. One for Raman, one for Aman, one for Suman. Both the sides, debit, credit, you have to create three amount column, including the new partner. Now by balance BD, old partners balance we will get from liability side of the balance sheet. So Raman is having 3 lakh, Aman is having 1,50,000 as their capital balances. It is written in the liability side of the balance sheet. So in the credit side of partners capital account, we will write by balance BD, Raman 3 lakh, Aman 1,50,000. Then what you are going to write? Now we will see some journal entry. Then we will come back to partners capital account. First journal entry will be for WCR. WCR means Workmen Compensation Reserve. As I have already taught you in the last class, so Workmen Compensation Reserve account debit 55,000 given in the liability side of the balance sheet. That is we are debiting. Then how many liability is created in adjustment? For 60,000. That is to provision for workmen compensation claim 60,000. So how much is the loss? 60,000 workers are asking. We have created reserve for 55,000. More 5,000 we have to create provision or we have to pay. Both are losses only. So revaluation account will be debited by how much? 5,000. Now what will be the next journal entry? The new partner is coming, Suman is coming. He is bringing two things with him. One is his share of capital, that is 2 lakh, his share of goodwill. How you are going to calculate the new partner's share of goodwill? Total goodwill of the firm is given in the question. How much total goodwill? 1 lakh rupees. And Suman is coming for 1/5. 1/5 of 1,20,000. So Suman, the new partner, is bringing two things. His share of capital and goodwill. What will be the journal entry? Bank account debit to Suman's capital account to premium for goodwill. So Suman's capital 2 lakh, premium for goodwill 20,000. The new partner is bringing 2,20,000 in cash. So bank account increases by 2,20,000. Now if you see this journal entry, Suman's capital account is credited. He is bringing capital. So in the credit side of capital account, you will write by bank. How much? 2 lakh in Suman's column. And what you are going to do? This premium for goodwill brought by the new partner Suman will be distributed among old partners in sacrificing ratio. So always remember, whenever the new partner comes for some share, for example in this question the new partner Suman comes for 1/5 share, and the question does not tell you that 1/5 share how the new partner is getting, like from the old partner how much the new partner is getting his share, nothing is mentioned. So what you will assume, whenever